A correction in Tesla? What's going on? I'm Ross here for your Business News Central update. Today the S&P 500 fell 0.21%. The Dow slipped 200 points and the Nasdaq gained 0.51%. On the day after Congress officially voted to pass the coronavirus stimulus bill, we continue to see some of the small cap companies continue to outperform the S&P 500 and the market at large. And these companies are typically your cyclical stocks, which means that Wall Street may be starting to price in a strong bounce back to the economy in 2021. The Russell 2000 was the best performer today, up nearly 1%. One thing that I'm keeping an eye out for is the performance of Tesla and the S&P 500. Now that Tesla is officially a part of the index, it puts shareholders in a very interesting situation. Tesla is truly an anomaly when it comes to companies entering the S&P 500. Everyone knows that Tesla has had a monstrous year. It has blown past any expectations anyone could have had in terms of both stock performance and earnings on a quarterly basis. This has resulted in Tesla reaching a huge market cap that left Standard & Poor's no choice but to include the company in their index, exposing the company to over $11 trillion that are indexed to the S&P 500. It is also no secret that a lot of people feel that Tesla has overshot their true value in the short term and could come crashing down. Tesla went into the S&P 500 at all-time highs. With a 1.5% weighting in the index, it contributes seventh most to the performance of the S&P 500, which means investors who have both an S&P 500 index fund and individual Tesla shares in their portfolio could potentially be significantly overweight Tesla at a time where it has an astronomical valuation. At a time where a lot of investors feel that Tesla could be a bubble and could come crashing down. I don't know if I necessarily feel like Tesla needs to come crashing down because I love the long-term outlook of the company, but I do feel like it needs to pull back from these levels. So with investors now being potentially overweight Tesla in their portfolios, and with the valuation of the stock being so high, a correction in Tesla is very feasible, as investors may look to reduce their exposure to the electric car manufacturer and technology company by selling individual shares of the stock. And because Tesla is in the S&P 500 and makes up 1.5% of its weighting, seventh most of amongst all its components, a correction in Tesla means that the S&P 500 will actually be weighed down by the automaker. A lot of experts are expecting a total market correction around February or March next year. If a correction does happen, I could see Tesla being the driving force of that correction, steering the market lower during that time. Every day something happens, and I want you to know. We'll see you tomorrow.